Kia ora team, and welcome to another month of questions with Grant Stevens, your man, the mortgage broker on the ground from Helloyello. So we're going to go through and answer a few questions from our audience this month, and look forward to hearing some answers from Grant. So here we've got Brad from Otara. Can I renovate using equity in my property?
Yeah, you can. If you need to borrow money to do that, you need to apply for that.
Okay.
But yeah, if you've got, let's say you've got a house that's worth $800,000 and you've got a loan of $500,000, you could actually bring that mortgage up a little bit, up towards 80% of the value of the property, and use that money that you've borrowed towards the renovation. So yes. Yeah, really commonly done.
Oh, fantastic. Next question we've got from John from Greymouth. I got a pre-approval with the bank myself. Can I still use you as a mortgage broker?
Absolutely, yeah. We love these ones. People that go direct sometimes don't get the best experience. Sometimes they do, but we like to pinch those clients and make sure that they get proper advice through an advisor. So if you have got it pre-approved from a bank, we can do the approval through the same bank and other banks all at the same time. So yeah, get in touch and we'd love to help.
Fantastic. Now we've got Gilly from Green Lane. As a mortgage advisor, what do you wish first home buyers knew?
I wish they knew that their total outgoings are going to increase. A lot of people do realise that before they engage, but then sometimes when people see the repayments, they're like, wow, that is going to be a bit of a game changer for us. So that's probably one big thing. And I wish people also knew that they could get a loan with a lower deposit. Nice. Some people think they need to get to 20%, but actually they don't need to. They can get away with as little as 5%, so that can be a game changer.
Well, that actually flows on to Tom's question from Point Chev. He said, I've only got $50,000 in my KiwiSaver. Is there any point talking to a mortgage advisor, or shall I wait?
Depends what you want to spend in terms of purchase price, but $50,000 can absolutely get you into a home. If you can get away with as little as 5%, 50% is actually 5% of $1 million. So that could get you into $1 million home. Yeah, you're going to have higher repayments. You don't have much equity in the property, but absolutely you can start getting into that house and chipping away at that mortgage.
Fantastic. Now we have Danny from Onehunga. Why are people with high incomes still getting declined?
Well, generally people with high incomes will spend more than the average person, so it could be down to that. Your expense benchmark as a high income earner will be higher as well. So you should still be able to borrow. If you do have a lot of discretionary spending, we can make a plan when we approach the bank to exclude that from your application. So that could be a reason, but generally someone with a high income should be able to do pretty well and get themselves into a decent spot.
Oh, fantastic. So lastly, we have Kitty from Mount Maunganui saying, am I better to buy with my partner or buy by myself?
Generally, it's better to buy with a partner because you've got more borrowing capacity. You have one lot of property costs and generally one lot of outgoings. So when you have two incomes, you can actually borrow more. Once you've covered those outgoings, your borrowing capacity can be exponentially higher. So yeah, two people is better than one, but there's a lot of people out there that have done it solo as well. So if you are on your own, absolutely give it a crack because you could be a homeowner by yourself.
Yep. Hey Grant, thank you so much for that question and answer session.
Oh, you're welcome.
You did a great job answering those questions, and I really look forward to next month. So team, if you have any questions, please don't hesitate to send them through, and we look forward to Grant answering away next month.